Hello and welcome back to Understanding Crypto. My name is Herve, and every other day on this channel I try my best to bring you crypto in the easiest way possible on the internet. If that's the type of content you find interesting, be sure to like this video and subscribe to the channel with your notifications on so that you don't get to miss another value-packed video like this one. Now, before we begin, I would like to say that this is a very controversial topic. So it is really not financial advice. I'm really just sharing with you my own opinion and perspective, what I see on the charts. So usually, I think it was the other time I said in the Discord group that I will stop talking about figures because it seems like those figures trigger a lot of people. I conducted a lot of experiments on Instagram. If you want to follow me on Instagram, the link will be in the description of this video. I conducted some experiments and I found out that a lot of you would vote that BTC actually goes down to $3,000. And that is not true if I ask you right now. Like, majority of people will comment that it's not possible. But when I conducted my experiment on Instagram, a lot of you actually voted that BTC could go there. Why? Because I changed the colors of the charts and I removed the figures. People did not have any idea about price, so they voted that it will actually go there. And so when I look at that, I start to see that I am not really as crazy as some people think I might be, and it goes a long way to actually make me think that this could actually be possible. Because believe me, it's crazy to even say that this is possible, yeah. But everything on the charts scream that it will happen. I do not know how, I do not know when, but everything screams that it will happen, except it comes down first. And we will understand that as we go into this video. It might be a lengthy video, so if you do not have the time, save the video for later and do leave me a comment. It will go a long way to push the video through the algorithm. That will really go a long way to support the channel and support the work we are doing here. And it might actually save some people in the future. If I turn out to be right about all of this, then it will save a lot of people so much money, and it could potentially make a lot of people a lot of money. So a lot of you know what this is. Yes, you know this. Let me change this to yellow so that it's clearer. Okay, cool. Now, we all know this. This is a trend line. And if we clone that, we will have it like so. Ideally, what you would expect from this type of structure is something like so. So if you see price move like so, hits up here and comes back to the downside, hit down here, goes back up, hits up here and have something like so, yes, and then comes back down like so. Now, what you would expect from this particular point is that price should fail to go above this high right here. That is how it will come back down like so. So what will tell you that this thing is actually going to break down according to this pattern is that price fails to go higher than this previous high right here. So if you see this and you see price do something like so and come back here, it will break. Not guaranteed, of course. There is no guarantee here. I think I should have put that in the disclaimer. I cannot guarantee you anything. It's just like being alive. I can tell you that, hey, I will in the next video we're going to do this, but it doesn't really mean that I will for sure be here. For all I know, I could not be here tomorrow. That happens. So, but given my current health and stuff, I know that I will be here. That's the same principle that we apply here. Given the structure, given what we see, given the data that we have, we know that there is a very high likelihood that it should happen like so. It doesn't mean that it must happen. It only means that the likelihood of it happening is drastically increased given the data we have. I hope we are all clear. Now, as I said, this might be a long video, so, and it took me quite a lot of time to put this all together. So please save the video for later if you do not have time, and do leave me a comment and interact with the video by liking it or sharing or something. It will go a long way to support the work. So when we see price move up like so and fails to go above this previous high right here, we will assume that it is going to go according to this structure. And the first target of this structure is the distance from here to here. That's the distance between the support and the resistance. That will be your first target. The ultimate target is this one down here. It doesn't matter what market it is. It doesn't matter if it's Bitcoin, Ethereum. It doesn't matter. It doesn't matter if it's the S&P. It doesn't matter. Anything that has this structure has to follow it like so. That's the rule of this pattern. It doesn't matter what price it is. Now, I say this because if you take the same structure, which if you go to the 1 hourly time frame, a lot of people will respect what you are saying because, well, they use it and they see it working in, say, an hour or two. But when you go to the monthly time frame and you see the same thing and you tell them that, hey, this thing has a possibility of doing like so if it did not go higher than this one, they'll say no, it can never happen because this figure is too low. So it's really an emotional fight. Yeah. Now, I have this video on the Bitcoin price history. It will do you a lot of favor if you can actually watch that video later. It will actually help you understand this one a lot more better. So, but for people who have watched it already, they have no problem. You will perfectly understand what this video is all about. So this, it doesn't matter if it's the S&P, it doesn't matter if it's the Forex market, it doesn't matter if it's BTC, it doesn't matter. You are following the structure. And when you take your measurement from here to here, you now look at the corresponding price. What price will that be? So when you are doing your analysis, you are not doing analysis based off of price. You are doing your analysis based off of price action, not off of price. Off of this is what is happening in the markets. So when you think it's going to go up to here, that's the only time you turn to look what will be the price when it does go to here. It's not like you could actually take price out and then you still do this. And that is how you keep yourself focused and you don't get emotional. Now, there is a likelihood of it bouncing from here and not necessarily coming for the ultimate target down here. The ultimate target of an ascending channel is the lowest point of the channel. That is its ultimate target. The ultimate target of a descending channel is the highest point of the channel. So if this was inverse, let's see if we can, yes. So if this was like so, this will be a descending channel, yes? So this will be its first target when it exited the wedge, the channel. And this will be the ultimate target as it comes to the upside. Now, it doesn't have to come up here, but to be conservative, this will be your first target in said scenario. Now, this is where a lot of you will start to run away, because I'm about to show you something which you may not like. Before I show you this, I just want to make it clear. I'm a Bitcoin bull. Bitcoin holds majority of my investment portfolio. So it's not like I'm saying all of this because I want this. No, I don't want the type of drop that I see here, because I see that a lot of people will probably lose their jobs or something bad will really happen. You know, for this to come to pass, something bad will really happen. Okay, let's take all of this out. So if we go on the monthly time frame, you will see the same type of structure on the monthly. So ideally, you would want that this thing should fail to go above this high right here to confirm the channel. So if you saw BTC do something like this and did not go above this high right here, then you will easily see BTC coming back down like so. Now, I don't even want to be mentioning those figures because they trigger a lot of people, and you will probably just leave me hate comments in the comment. But I just want to show you some facts, yeah, so that we are looking at the facts instead of talking about its price. With the price, I'm giving you all time frames, so you can actually figure out the price for yourself. All right, so that's the first thing. This is something that we use on hourly time frames, 4 hourly, daily, and it works. So yeah, that's it right here. So if you have a descending wedge like so, and you find that price is doing something like this, you would expect that price goes up like so. And the first target for this descending wedge will be the distance from here to here. So if you take that and put it outside here, that would be your first target of your descending wedge. Now, ideally, when you see something that looks like so, before it breaks to the upside, you want a little retracement right here. So it follows the same rules of failing to go above or below the previous high or low. So with this one, which is the descending wedge, you want it to fail to go below this one right here. So if it comes down and does something like so, you would expect it to go for this target, and that's your first target. So you expect it to go to the upside, and then you can take your second target, which will be this distance right here. So your second target will be like so. Now this is pretty basic. This is just the start of the video. It's pretty basic. I do a lot of stuff to confirm that this could happen, you know. If not, it will just be the retail stuff. I have a lot of confluences that I use to confirm if this is actually going to work. So you have your first target right here. This is the first target. The first target is this one. The second target is this one. Yes, that's your second target. And your third target from here to here. And your ultimate target is this one right here. This is the ultimate target. Now this can take a very long time to happen depending on the time frame. If it's on the 15-minute time frame, it will take a shorter time to happen. So if it goes up like so, you may see it bounce at the first target, come back down, do a retest right here, go up, maybe do another retest and go for the second target, and it will keep doing that until it goes for the ultimate. Now it doesn't have to go for the ultimate. There are times when it can go for the first target and immediately plummet like so. So again, I use a lot of stuff to confirm that, but that is basically the principle, the idea right there. And if we go to Bitcoin's weekly time frame, this is something which all of you on this channel will probably know. I've been talking about this for a very long time. So you see it on Bitcoin's weekly time frame right here. Now you must follow the second candle. Yeah, so I see a lot of people even on Twitter, they would take this line and put like so. I'm like, no, you are just drawing a random line. You have to follow the rules. So if you take from the first candle close right here, you have to go for the second. So you must follow the candle closes. If you are using wicks, you must follow wicks. If you are using candle closes, you must follow them as well. Now you have that that is the resistance right there, which broke out right here. This was the retracement right here, where I was telling you that this thing could come to 18k or something, and it bounced at 19, I think. Yeah, now you have your support coming in here. Now I'll not try to make that too perfect so that it doesn't take much time. So basically this is what we have. Let me change the colors now. So you see what we are saying. Yes, we had the first bounce right here, and when it exited the channel, you would expect it to go for the first target right here, and it actually hit that first target here. Let me enlarge that. You see that it actually hit the first target. Yes, that first target, it actually hit the first target right here. Okay, so you see it hit the first target at 31.6. You guys remember I talked about 31.8, 31.9. Yes, that's because, so when it hit this, when it hits this first target, there's a very high likelihood that it will come back to the downside. Very, very high likelihood. And when you have Fibonacci confirmations right here, then it gives you more confidence that this is going to happen. Yeah, so that is it hitting the first target here, and we have the second target as well, as we talked about earlier. So we look for the second target right here. So this will be the second target. and we put where price exited the channel. Okay, cool. Now note that we are not doing this looking at price. We are just doing this and looking solely at the charts. Yeah, so this ideally should be our second target. Now when I say it like this, a lot of people agree with me. Yeah, a lot of people agree because it's saying that price will go up, so everybody will agree because you want, even I am somewhat biased with it, you know. So but I want to focus only on the charts. If it is true right here, it means I should always play by this rule. I cannot come later and say, no, this one will not happen because it's not going where I want. No, you have to follow the rule whenever you see the same structure. So this is the descending wedge. Now, so we all agree with this, yes? This works. I think we all agree, yes? It's the same thing from here to here. Again, watch my video on Bitcoin, Bitcoin price history. You will understand a lot more from these. Now, if this is true, and if this is true, it means the inverse of this is also true. It means if we follow it like so, it should be true as well. It should be true. If we follow it like so, it means if we see price going up, if we see price going up like so, and do something like so, and do something like so, then we should expect it to fail to go above this one right here and plummet. Plummet to where? To this one. And in this case, this will be the first target right here, and this will be the second target, this will be the third target. The ultimate target will be coming back down to this low right here, and if you are not careful, it can actually dip down below here, fake everybody, let everybody know, oh, it's going to zero, it's going to zero, it's going to zero, and it just goes like so. Yeah, because believe me, if what I'm saying here ever happens, everyone on the internet will tell you it was all a scam. It was all a scam. I told you to not put your money in that stuff. I told you to not invest in that stuff. Now you lost all your money. Some people will get divorced. A lot of things will happen. If I am right about this anyway. Maybe we'll probably put this channel on the map, you know. We'll probably gain like 100,000 followers if this ever happens. So, okay. So that, you understand that, yes? You can try it even on the 1 hourly, but patterns work a lot more on the daily, 3-day, weekly time frames. You know, they are not as effective on the lower time frames because lower time frames are much more volatile, and patterns take a lot of time to form and actually give you good data. But when you go to the weekly time frame, the monthly time frame, they are not lying. They are really warning. That's how I caught Bitcoin to 20K. It's the same way that I caught Bitcoin to 20K. And as we go into the video, you will see a lot more things that you yourself will find fascinating. So if we apply that rule down here, if we apply that same rule down here, let us take the same rule and we apply it here. Do you see what is happening? We have the first move from support right here. We have the second move, support right here. That's our second move. And the third one is here. Now, I informed you guys in the Discord group that I was sorry and stuff because I did not see this particular pattern when BTC came down here. So I was actually mad at myself because I would have went with like 70% of my portfolio inside, when if I saw this, I would have at least had the idea that BTC was going to reverse from here. Where will it go if it reverses from here? It's very easy to know. You just take from here to here, and you are looking for the 0.618, which will be at 48,000. Yep, this would have put the channel on the map. Now, if you take from there to here, look at where the 0.618 is, and look at where that our second target is going. It's also pointing at the 0.618. Now, there is a chance that we come right up here. There is a chance. There is a chance. This is something I saw today. There is a chance we come right up here, even to 54. But I'm not saying that I'm going to like wait for that. If I come up here, I'll just sell. So that is basically that. So if I saw this pattern back at 15K, I would have had the idea that BTC will be headed up here, because this will be my idea. This pattern and this is pretty much what we just saw right there. So you have it like so, and something like this, and then plummet. If this comes here, the first target will be this one. This will be your first target. Whenever BTC will break this trend line like so, that will be your first target. If it breaks that trend line even here, this will be your first target still. The only way to defeat this pattern is if BTC can go above this high right here. If BTC can go above this high right here. And this is actually the picture which I posted on Instagram, and most of you voted that BTC goes to the downside without knowing that they are voting for BTC. That's the point. That's what I found interesting. So you see, now it's just looking crazy now, but you see what I mean, yeah? Okay, cool. So I was looking at this monthly BTC on the monthly today, and I've seen a lot of people online saying that this is a divergence, but it is not now, is it? This, that BTC coming up here is a divergence. It is not, because this right here was the divergence, and so it plummeted. This is another cycle beginning. This right here, this will be another cycle beginning. This was the divergence. So we had price up here, this first high corresponding with a high in price, yes, but the second high, which is higher than this one, does not correspond with another high on the stochastic indicator. So that high right here actually corresponds with a low in the stochastic indicator. So this in itself was the divergence. This was the cycle of that divergence, and so price plummeted from this divergence right here. So all of this plummet is because of this divergence, and so price, the stochastic, stayed pretty much dormant for a very long time because of the divergence. So when the stochastic gets back up here, it is in another cycle. You cannot take this now here and say now it's a divergence because of this. No, you are skipping this second high right here. So we will have to see another divergence still here, if a divergence is what we are actually looking for to confirm some type of plummet. But this will not be a divergence. We can say that, okay, it's in the overvalued, and that will be plausible, but it won't be a divergence with this one, because it is a high from this one right here, and which is just plausible because it actually plummeted to the downside, lasted for a very long time, accumulated actually here, which actually corresponds with the low stochastic here, and then it's moving up. So that will not be a divergence. Now, what got me fascinated by this thing is that when I take the Fibonacci from this low right here, this is the 2018 bear market low on the monthly time frame. When I take Fibonacci from that low to the all-time high in 2021, ladies and gentlemen, we see something spectacular. BTC bounces at the 0.786. You can see it here clearly. Now, this got me kind of angry because I would normally buy here. This I would normally buy here. When I see price here, I would normally buy. If you watched the other video where I was telling you that Litecoin will go down to I said $89. It bounced at, I think, $87. Let's just check. So you see the position where I was saying Litecoin will bounce down here, yes? Let me take that out. This is it. This should be it, because I said $89, and this is it happening right here. So I would normally buy, because according to Fibonacci, the 0.786 is the institutional price. This is where institutions buy. And if I saw that I would go in perhaps with 90% of my portfolio. Well, it's Bitcoin. That's why I said 90%. But I did not see it. So it got me kind of mad because I could have, if I saw that, I would have bought heavily because I did buy some, but not enough. I actually sold some of my stack at 17.2, bought again at 21.3 or something. And then I bought, because I bought first at 15.7. Then I said it the next day in the Discord group. Discord link in description. Sorry, saying bio. I'm mostly on TikTok, so I'm used to the idea of in bio. So yeah, so when we see this right here, this is something I would normally buy, and I normally would know where this thing would go. When I buy at the 0.782, I am targeting the 0.236. The 0.236 in this particular structure will be, let me change this to the right. Okay, cool. Now the 0.236 of this particular structure will be at $47,617. Now it could go higher than that. The 0.236 does not normally hold. It may hold sometimes, like it held with Pepe. This right here, this is what you would call the Fibonacci institutional price. This is where institutions like to buy. Now, according to Fibonacci, this should ideally go back up to here. It doesn't mean it must go. It only means ideally, in theory, according to Fibonacci, it should go back up to here. When I saw this made me very angry because I could have just seen this like so. It would have been a lot of confluences, people. If we go to the weekly time frame, you will see it again like so. You have so many points of confluence coming in at that particular zone right there. I did not have this picture before. You know, I was actually, that time I was doing some trades in the lower time frame, so it actually made me not focus on the higher time frames. So you see the confluence coming in around here. You see it for yourself, and you see it. We would have longed the bottom. We would have went long here. All right, no problem. But it does confirm the pattern. Yes, it does confirm the pattern, because after the 0.786, I would expect that price goes up to about the 0.236. After the 0.236, price could have like some weeks to the upside, those weeks, and after that it should come back to the downside. In theory, it should come back like so and surpass that 0.786. So the theory still just points back down to this point, you know. And again, even I do not want that to happen, but it's really just there in the charts, you know. The only way that I could just change my mind with this is if BTC does something like so. If it does something like so, I will 100% be buying a lot here. But if it doesn't and does this first, I will sell here, and I may buy some here, but majority will be down here, depending on how it will look at that time. But for now, that's just my idea. Okay, so you see why I had this problem. I messaged you guys in the Discord group, left you a forecast, that I got so mad with myself because this is something I would usually buy. This is something I would usually go long on. This is the same reason why I told you guys that XRP will come back to 43 cents, 42 cents, between 42 and 39 cents. The 39 cents I was telling you in that video was this region, was the 0.786. The 42 cents was the golden pocket. So between the golden pocket and this institutional price right here, that's where you want to buy. So let's take Fibonacci from the all-time high on the weekly time frame, from the all-time high to the 15K local bottom. What do we see? We see that the 0.236 we just talked about is inside of the golden pocket. Here, we're getting so many confluences here that I can't just ignore this. I can't just be like, meh, it's just It's just a coincidence. I cannot ignore this. You see it for yourself. This is not like I'm the one saying it. You see it. That's it right there. We have the 0.665, the 0.618, and then we have the 0.236. So the Fibonacci measurement from the bottom of 2018 to the top of 2021 is giving us the 0.236 right here, which is usually the top. And from the top of the 2021 bull run to the now local bottom at 15k is giving us the 0.618, which is usually the bottom. Now the 0.786 is coming in at 55k. That is why I said this could also be possible. It's not like it's out of the play. It's also possible. But ideally, you would want it to reverse here. If it does come here, what is this? The institutional price. The same institutional price like this one. So if we invert the chart, you will see it like so. This 0.786, this right here. If price ever came here, I will 100% sell. I don't care what, I get so many hate comments for saying stuff like this. But I will 100% sell. If BTC did something like so, I will 100% sell. If it comes to the 0.618, I will also sell. But there's a very high likelihood that I will sell and I will move to futures, and then I will put my stop loss somewhere down at 43. If it takes me out, then it's okay. But if it goes here, then I will close the position. Now, this is some other thing that we could just look at here. If we go for this particular candle where it points for the 0.786 and we are looking for this particular candle's 0.618. I do have some of the educational content on Fibonacci if you want to know more about this Fibonacci stuff. I do have some live videos that I had for the premium group sometime before, but I noticed that, well, nobody's watching it now, so I can just let them be there in public, so for everybody. So if you want to know more about Fibonacci and stuff, you can watch them in my live section of this YouTube channel. So if we take from down to up of that particular candle, where do we see the 0.618? We see the 0.618 right here. So this zone where I am saying that I would 100% sell is between the 0.618, which is our golden pocket, and the 0.786. So that is pretty much the farthest I can see price go. If price could go above this, if we could have candles closing above this with some volume, then BTC will be going for the one fib at 79k. I'm just like giving you the facts, so I'm not like saying it must happen this way. No, I'm like open to any option. Yeah, so that is the ideal point. If it could go above the 0.786 with some volume, like actually showing momentum both in our stochastic. Now this is highly unlikely to ever happen, highly unlikely given what I see on the monthly time frame here. But if it ever did happen, then you will see it going for this 79k right here. We will reveal what Bitcoin's next bull market top will be if BTC ever went to $3,000. So stay tuned. If you are enjoying the video so far, leave me a like, leave me a comment, engage with the video so that it can reach more people. Now, a lot of people will be like, but this can never happen. There is no way Bitcoin can go up here and still plummet. It's not, it doesn't make sense. There is no way Bitcoin can go even up here, which will be 256%, and still plummet by almost 90%. Yeah, and so that is what I believe institutions are doing that you and I do not do. We don't look at this as a bid. Like, this is an auction house. Everybody is giving a price. So when people bid when people are basically bidding for a higher price, then the price will go up. If no one is willing to buy at a higher price, then the price will go down. Everybody if you go to your favorite exchanges, you will see the order book, yeah? You will see different prices and people are trying to buy at different prices. If everyone suddenly does not want to buy at a high price, price will instantly drop. So the price of an asset is how much people are willing to buy it, and this is how institutions see it. Retail investors like you and I may not see it that way. We see it as this fortress that this can never happen because it is this, you know? But no, that's not how institutions see it. They just see it as a regular asset and they are investing to make money. They do not care who loses or who gains. They just want to make their own money. They don't care. A lot of you would say, it can never happen. How can this go up here and still plummet by 93%? How is that even possible? That's what the charts are saying. If it did go up here and start to plummet, you will have this already. You will have this and this. That's a structure you all know. You all know that. But anyway, let's go back to 2018 right here and see what happened. 2018, we see that BTC did this. 339% to the upside. From that 2018 top, BTC still plummeted by 72%. So how is that possible? If you told anybody here that, hey, I think this thing will still go back to 3,000, they'll be like, no, come on, you're on drugs now? You know, that's what they'll tell you. If you told anybody that this thing will still go to 5,000, this guy is crazy. This guy is nuts. Yes? But what? BTC still plummeted down here. When we look back at this, can we prove with Fibonacci that that could have happened? Can we prove it? Is there anything there that we can use to be sure that we are actually doing this right in the future now? Is there anything in the past that could prove this happening? And the answer is yes. Let's see how. If we take Fibonacci again, you guys know I like Fibonacci. And let's take from the body to here. Yes. What do we see? We're taking from the body, yeah? We measure from the body up here to the close. So the close, candle close, weekly time frame, Bitcoin versus the US dollar, not Bitcoin USDT, Bitcoin USD. We take the candle closes. What do we see? We see that this close up here was at the 1 fib. That 1 fib is also the 0.618 if you are taking Fibonacci from this all-time high to the bottom right here. To this bottom right here. That's also the 0.618. So we see how BTC perfectly hit that 0.618 and then plummeted. Now, we see that BTC hit that 1 fib and started its plummet. According to Fibonacci, as we have rightfully said, when you see a move to the upside, like so, expect a retracement of that move back to the 0.618 or the 0.786. So you need something like so, then so. According to Harmonics, this will be the AB equals to CD pattern. So this will be the A, this is B, this is C, this is D. Just something I wanted you to know, and I will show you that in a minute. Now, we see that that is exactly what BTC did right here. It went like so, retracement to golden pocket or 0.786, and then did this. Now, according to Harmonics, the AB equals to CD. So you have A, B, C, and then you have D right here. So ideally, the distance from A to B should be the same distance from C to D. So usually it should be something like so. Ideally, it should be something like so. But you could have the overextended D. So ideally you would have your extensions like so, but it could go lower. There is never a guarantee, but it helps you have a better entry at least. You know, if you bought here, you'd be better than somebody who did not sell. If you sold up here and bought down here, you'd be better. Yes, so that's just a little lesson that you can take from that particular structure. We will actually come to that because we also have it up there. So that is simply what happened here, and if we invert the chart, you will see it clearly. Now where is it? I'm saying see it clearly. Okay, this is it. So we have it like so. We have the move to the upside. We come for the retracement. This is what we did with XRP, yes? Before XRP exploded to the upside. This is a similar type of explosion from Mr. XRP. Yeah, and with BTC, this is to the downside instead. And if you told anybody, they will say no, because they are looking at price. You are looking at price action. You are focused on price action, and so this is not something I can ignore. This is the move to the downside, retracement, plummet. Look at it right here. Isn't it looking somewhat the same? I mean, how is it I'm the only one talking about this? Isn't it the same? That isn't it ideal that you would say move to the downside, retracement, and plummet? I mean, anyway, we saw the move to the downside. Now we were trying to prove this with Fibs, so let's go. Now let's remove this one from the all-time high to bottom. We see that Fibonacci told us that when it retraces the 0.786, we expect that price goes for the 0.236. 0.236 in this particular structure will be putting us at $5,149. So it is not easy to catch the bottom, but at least this would have given us a good entry. So if you see this, you should be buying. This is the opposite of this right here, of the other movement, of this other movement. Let me take this from here to here. So it's the same thing. Retracement from golden pocket, this move to the downside, retracement at the 0.786 or golden pocket. It may retrace at the golden pocket and then plummet. Yes, it's the same thing like so. Move to the upside, downside, retracement of 0.786 or golden pocket. Now this is the golden pocket up here. So retracement of 786 or golden pocket, come back to the 0.236 and then plummet. Ideally it should look like so. It could go slightly higher, it may not even reach there, but that is the movement that you have in mind. So ideally that's what you would expect with this type of strategy. So that is basically what Fibonacci was telling us right here. Yeah, so it's a very important thing that we could have seen. Now, so something I wanted to show you is that if BTC actually went for that golden pocket up here, if it did go for the golden pocket up here, this golden pocket, or even went above it, but I don't really think it will do that. There is no way to know exactly where it will retrace, but my own rule is I must only get in at the 0.618 or 0.786 and only get out somewhere. Maybe I could get out at the 0.382 depending on certain scenarios, and but I would like to get out at the 0.236. It could go higher or lower depending on the trend type. Like this one right here, it went lower. So if I got in on a short right here, I'll be going out at the 0.236. Yeah, and yeah, so that would be my ideal projection. It's the same thing with from this bottom right here. I would like you to debate me in the comments, by the way. If you have a contrarian idea, let me know in the comments. If you have your own charts, you can actually send them in the Discord group and we can discuss. It's not like I must be right about this. No, this is just what I observe. I don't see any reason to believe that it's just going to go to 100k like a lot of people are saying now, you know. So this is just what I am observing. If you have a contrarian idea that seems to have been working back in this past or maybe in other markets, let me know in the Discord group. I will be very happy to look at what you think. So it's not like it must happen as I'm saying. No, it's just, we are all observers, yeah, and we make up our own strategies and theses based off of what we observe. So if you have some other idea, let me know in the Discord group. Send me a message, tag me at VE in the Discord group, and the link is in the description. If you can't access the Discord group, you can also send me a message on Instagram. I will be very glad to see what you think, see your own charts, see your own perspective. I like to see what other people think. So it's not just like this must happen according to this. No, 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 no. If it ever happened, I may brag about it because, I got insulted a lot of the times. I've been called an ape just for saying this. And it's just sad because I am just observing the charts. I'm not making up any stories. You can see for yourself that this has been working in the past. And Fibonacci has been working for a very long time. But yeah, so you see it. And right here, I would expect that if I got in right here at 15K, according to my strategy, I will be getting out only at the 0.236, or depending on the, structure and stuff, I could get out at the 0.382. But anything before that, I will not get out. I don't I don't hurry. If the charts are saying that I get out here, that's the only time I get out. I don't care if it dumps right back down here, as I've been telling you guys. It could dump back down here. If that did happen, I will just buy happily. It's not a problem. If it did happen, I won't be sad that, hey, I was waiting for 3K. I know so many people will mock and stuff, but I don't care. If it dumped back down here, I'll just buy. But according to what we are seeing now, if this continues to follow the fractal, then the outcome of it will be a move to the downside like so. Now, some other thing that I would want to bring to your attention is this, and I found this pretty interesting. The Elliott wave theory of this chart. So if we look at this, we will see that this chart has been following Elliott waves all along. And it has been doing that to the T perfectly. After this perfect Elliott wave, we should expect an ABC type correction. A, which is the local bottom right here, B, which will be somewhere around here, and then a C. Now, according to Elliott waves, if 2 is a simple correction, like this type of zigzag like so, if that is the movement of 2, then 4 will be complex. 4 will be something like so. The second rule to confirm this is if 2 has taken a long time to form, then 4 will take a shorter time to form. So we have 2 taking 259 days, then 4 has to take a shorter time than this. So we have 4 from here. So from the top to the bottom, that is 4, yeah? Taking only 70 days. So it is confirming that we are really witnessing an Elliott wave in its glory. Now, it also shows that if 2 is this deep, then 4 will not be as deep. 4 should not be as deep. And all of these are interchangeable. So 4 can be deeper than 2 and take a longer time than 2, whereas 2 is taking a shorter time and is not as deep as 4. So if 2 would plummet by 72%, as we said here, then 4 should not plummet up to 72%. That is 55%. So this is clearly the Elliott wave. So we have wave 1, wave 2, wave 3, which is the longest one, the biggest one, wave 4, and wave 5. From wave 5, we start the corrective wave, which will be A, and now we are in B. Now, I'm not like a master of Elliott wave theory, but it's just very interesting to see it play out like so. If you are very good in Elliott waves, let me know what you think the target for C should be. It could be an extended C, but just let me know what you think the target for C would be in the comments for those who are very good with Elliott waves. But it's just interesting to see how the rules for the impulse waves are applying here, and they apply so perfectly. It's really an interesting thing to see. It's really interesting when you see them happen this way. It's almost like it's planned in some way. It's like it's really planned by the people who control all of us. Another thing we can also see on this particular chart, let's take the Elliott wave out. Another thing we can also see in this particular chart is the harmonic. So harmonics would state, which is the simplest harmonic pattern, will state that AB equals to CD. So you have AB like so. This is A, this is B. It should be equal to CD. So if C should be somewhere around the 0.618 or the 0.78. So you have it like so. So this should be the AB equals to the AB equals to CD, and the C should be at about the 0.618 or the 0.786. So you will either have it right here at the 0.618 or the 0.786. Now it could go lower. If you test it here, you will see that it went lower as we did before. Yeah, we tested it before and it gave us $5,000. So if you take it here and you put it down here and you take this from here to here, you get $4,900. So this same structure down here will give you this. So if it retraces to the 0.618 and plummets, or it retraces to the 0.786, but 0.618 is where I would be betting on, then it should be plummeting. Ideally, it should plummet down here, which will be $10,000. And Harmonics would state that the time taken to form A to B should be about the same time from C to D. So if we did actually go up here, then the same time that we took to form A to B would be about the same time we will take to form C to D, which is somewhat scary, I would say, because it will mean another 1 year of bear market, and that could be 2024. So just for example, if we did reach this right here, again, this is an example. I know when I say this, sometimes a lot of people will come to ask me, hey, I thought you said we're going to plummet this month. I cannot guarantee when we will plummet. I cannot know the date or time. I'm not God. So in theory, this is all in theory. Let's take this from here and we see how much time we took to form this structure. So that will be about, let's take this away, the actual bottom is here, so that will be about 378 days. So whenever we come up here, if in theory if we did come up here, it will be 378 days before we would find the local bottom. It is not guaranteed. We may find the real bottom before that. We may find it after that, but in theory, that will be the ideal thing. We actually took a shorter time to come down to D. So it's really not guaranteed, but according to Harmonics, it's supposed to be that way. So the distance from A to B is equals to the distance from C to D. And the time taken from A to B would be, in theory, equal to the time taken from C to D. It doesn't have to be exact, but that's what Harmonics would say. I'm just giving you like what the rules would be. But we see from here that it didn't happen that way. We took a shorter time for that to happen. So if this is working according to so, I would really hope that it happens this way, because it will mean another 1 year of catastrophe. That's just going to be horrendous, I would say. So I really hope that it actually comes back down instead. If it came back down to like 13, 14K, then I'll buy, knowing that, hey, there's a very high likelihood that we'll just continue up if we came down here, or even to maybe 17, 18, and took off. But if we continued to go up here, very high likelihood If we went to the 0.786, I am selling. I will not stay if this just went straight up to here. Not me. I will not be in this thing. So that is simply what the theory would suggest. Now, you have to know that if price did come up here, everybody will be bullish. Everybody will be telling you it's going for 100k, it's going for 1 million, it's going for 500,000. That's what everybody would say, you know, and people will buy. Well, they'll buy from me. I'll be very happy to sell to them. But that is simply what this all of these structures would suggest, that there will be a lot of bullishness, a lot of euphoria if price did come up here. Jim Cramer is saying there will be no recession, and everybody is suddenly getting very bullish when they will eventually forget about the possibility of a recession. I think I made a video about recessions. I will leave it in the description. When everybody forgets about the possibility of us having a recession, that is when it will actually come. The markets will never work according to what majority of people think. The markets need to be against everyone, and only the 5% win. That's how it is. Everybody tells me that this can never happen, and I'm happy for them. I also hope it doesn't happen. But if it does happen, I would have been prepared for it. But the people who think it can never happen are the people who will go take out loans and buy up here. Not me. Not they will not do that. I will not do that. So if it didn't happen according to the structure, because we always have to have like, what if it didn't happen? What will we do then? Or what will I do then? If it did come down here, I will just buy. If it came down to 20k, 19k, 18k, straight from here, I will probably just buy. And if it did come down to 14k, I'll probably buy my last back around there. Not guaranteed, because I'll still be suspecting it coming straight down, but most of my buy will be here if BTC just came straight down from its current price. But if it continued to go up instead, I will sell. So this is it's really counterintuitive, because if it started to come down here, everyone will be saying it's going to 10, it's going to 3, it's going to 0. Not me. I will think it will bounce here if it started to come down. It could still go down, but my bias will be that it bounces here, because it will not have been confirming the pattern and the way the waves and everything would work. It could still bounce from here and go straight down, but that will not be my bias. My bias will be that it bottoms up here. If you watched my video on Bitcoin's price history, then you would have heard me talk about increasing bottoms and decreasing tops, diminishing returns. So from the bottom right here in 20, you really need to watch that video. You know, when I make videos like this explaining stuff, so many people do not watch. You know, you prefer to just get signals and stuff, but that's not the way to go, I would say. You know, who knows what might happen? You know, who knows what might happen? So it's better to watch videos like this. You educate yourself and you see my own perspective of stuff. So we see that BTC's highs have been reducing. So the returns from bear market bottom to bull market top have been reducing. From the bear market bottom right here to the top right here, just approximate, not exact, it's about 12,000. From the bear market bottom right here, we have about 3 points of data for this, which is good enough. It's about 2,000. So the tops have been reducing and the bottoms have been increasing, because from the bottom down here, let's take from here to down here, 86%, but from this top to the bottom here, 84%. So the bottoms are increasing and the tops are reducing. So it makes me imagine something that looks like so, a symmetrical triangle, And my idea is the first side of a symmetrical triangle is usually the wrong side. When you see this, what price is actually telling you in plain English is some of us market participants believe that this thing should go higher. That's the people at support. Yeah, the people buying here, that's what they are thinking, that we believe this thing should be worth more. The people selling up here are thinking, no, I really think this thing will not go up again, so I should sell at this price before it dumps. I think this thing should not be worth that much, and they sell. That's what price action is basically telling you in plain English. I know it sounds stupid, but that's it. Yeah. So from what I have noticed over the years is that this thing would usually take the wrong side first, and that is why they say retail patterns. They call them retail patterns because when you start off with analysis, you learn this first. I learned this and I found ways to make them work for me on higher time frames. So when you see this, most of the times you will have the wrong side violated first. So if it went up first, I will think it will crash. If it went down first, I will think it goes up. It's the same thing that happened with chain link. Link went down. I made a video telling you that link is at spring. You see the same type of structure right here. Yes, the same, not exactly the same, but the same maybe idea. So when you have a consolidation like so, we always talked about links consolidation. The first side will be the wrong side. First side is always mostly the wrong side. So when you see it go down first, I made the video on TikTok telling you link is at spring, which means it will most likely go like so. Now, again, as I told you before, when it hits the resistance, expect a retracement before a move to the upside. Most of the times, it will not just go straight up. You will most likely see a retracement, then a move up. When it retraces, a lot of people will sell. Will step in, take price, shoot it up. And the retails that sold here will buy here. Same principle over and over. So that is basically what I was trying to show you here with BTC. So I think these increasing bottoms and decreasing tops are forming something that looks like so. And if BTC went to 100K, it will mean that it has broken to the upside first. You need to watch my video on Bitcoin price history to understand this better. I don't want to make this video crazily long. So, but if it went to 3K, it will mean BTC has broken the downside first, which is the wrong side. And that will help us predict what Bitcoin's next all-time high should be. So, ladies and gentlemen, drum roll. If Bitcoin ever went down to $3,000, and this sounds very stupid when I say it, then we will be looking at Bitcoin's next all-time high around here at about 240,000 ish. So if BTC actually went down here, that will be its next all-time high. The same thing if you take from here to here. So in theory, this is what it should follow. If it did not go to 3K, then it will mean that BTC has not broken out of that decreasing tops and increasing bottoms, which will mean that BTC is still in that symmetrical triangle, my hypothetical symmetrical triangle structure. Watch the video in the description to understand more about this, my theory. It's just a theory. I'm not saying it's going to happen like this, but I'm just telling you based off of Fibonacci what should be expected if it followed the Fibonacci levels. So I hope you did enjoy the video. I hope you did learn something from it. I hope you did understand it anyway, because I know I went into a lot of stuff right here. But if you did understand it and enjoyed it, let me know, or ask me a question if there is anything you have doubts in. If you have another opinion, also let me know in the comments. I will be glad to see what you think about this analysis. That to me is what I think will actually happen. If it happened differently, then okay, I'll just buy if it comes down here. But if it follows this exact thesis, then I will be a seller of BTC up here. But if it didn't and came down straight, then I will be buying back at the bottom right here. Thanks so much for watching, and I will see you in the next video.